Good afternoon, everyone. Jason here. Today is June 6th, and this is your aftermarket update. All right, so we're going to do something a little bit different here today. I'm going to show you our market maker levels. We're going to talk about how they work on other markets other than the two that we trade here at the Oil Trading Group. So as many of you know, and if you don't, we trade oil and ES here on most days. And really, I don't trade any of the other futures markets. There are lots of reasons why. But really, the bottom line is if you can master these two markets, that's really what you need to be able to be successful consistently. But these markets, all these markets have their own personalities. And as such, these different personalities and different markets fit people differently, right? So let's talk a little bit first here about the ES. Then I'm going to, we'll talk about the CL. We'll talk about some of these other markets, and I'll let you see the ES trade today. So I had a couple of trades here on the CL. I had this one trade on the ES that I bailed out of a little bit early, ended up with 2 points. The market goes up to our target, and we'll talk a little bit about that. So let's start here with the ES trade. So when I show you the trade of the day video, I'm going to show you how we got long right here, one tick above the daily structure signal at this 27.5. And you can see here that that really was the right entry for the day, right, as the market only comes down to quarter. And then actually comes down to 27.00. I get in at 27.5, and then my target was going to be right up here at 31.5 was going to be my target, and I end up at this double top right here. The market begins to stop and pull away, and I get out at 2 points. We did have a couple of guys that held on for the full target, but most everyone else got out, it seems like, when I did at the 2 point mark today. Then we had a couple of CL trades that really, the CL was really sluggish, choppy trading conditions through the majority of the time that we were in there today. We got to that European session close, and I stopped at that point. Market had a bit of a rally, and then, of course, we'll talk about the API report that came out and set the market to the downside. So, all right, let's talk about this for a second here. This is your daily structure signal, and what you look for is the market to kick the signal and pay the target. Well, it does not happen every day like that. That's what you look for. We were holding on for a 4-point target here at 24.31.5 as we were looking to get in here today. The market was in a fairly sluggish mode here. If you could kind of take a look here, this goes back into last night at 7 o'clock, and there just wasn't a lot of activity. The market opens up here, daily structure signal, and this is where it is that we get long. Like I said, we got to this double top right here, and the next bar came out, and I went ahead and pulled it off at 2 points, at a 2 point stop, and ended up with a 2 point target. So again, market rallies up into the structure mid, gets to within, well, it really gets to within one tick of the daily structure signal up here at 34.25, and then that's where the market begins to sell off yet again. And so when we end the day, actually it hits that daily structure target, or signal rather, and then just kind of rotates around to your market maker level on the other side. All right, so that is the ES. So we ended up with 2 points today. That's really the only thing, minus a CL break-even trade that we took. That's really all that we did here today, is this particular trade here on your ES. If you take a look at the CL, I'm going to show you a little bit of the choppy conditions here. So we'll turn on the CL. The CL actually does what you would expect it to do. It did kick the signal here and end up paying this target. We got to within, well, this low down here today was 0.8, and the daily structure signal was 0.1. So we didn't quite reach all the way down into the daily structure signal, but the market rallies all the way up to your daily structure target. And in fact, it ends up at your daily structure extension 1 here, right? So even though this the time frame cut it off, it ended up all the way up here at your daily structure extension 1. And so if you measure the breakout here, and we talked about this breaking out over the top here of this 47.34, that's where your structure mid. Whoops, I don't want those. Let's go this instead. Let's go, we're going to measure just how many ticks this is here up to your daily structure extension 1. That ends up being 97 ticks on the breakout. So what you would expect, and you had a little bit of a pause here at the structure signal, then you had a pause at the structure target, you had a little bit of a sell-off, and then the market went ahead and extended up into it. Then you had the API number that came out, and I don't know exactly what the number is at the time that I'm making this video, but clearly there was a build in supply as the market drops from this high up here at 48.40 all the way down to 47.87. That is 53 ticks in the after hours trading. That is a lot of activity in that after hours trading. Okay, so again, market maker levels, we know they work. You see me make videos just about every day, so we know that they work on the ES and CL. But let's talk about some other markets that you may not realize that they work on. So we're going to come down here to gold. This is the August contract here on gold. Gold was a little bit choppy here today, it looks like, right? So you spent a lot of time rotating around this daily structure signal here. But let's go back another day. I was looking at this a little bit earlier here. So as happens here, we didn't quite kick the target down underneath, but as the market opened up, it opened up right into the resistance point that is the daily structure signal, came down into the structure mid, and then ultimately down through the daily structure signal as well. And if you were holding on for this daily structure target, you could have been trail stopping behind each one of these levels, right? So let's take a look here really quickly. Let's see. I'm going to add a tool on this here for you. This is one of the tools that you get is your OTG risk manager. So we'll come in here, risk manager, and say okay. All right, so chart trader on, check, and here is, let's see. Let's reload the Ninja script here and see if we get that risk manager to load up for us here. There we go. All right. Okay. So this is a risk manager. You can actually, this is one of the tools you get in your trading bundle. It just helps you manage and kind of plan your trades and your risk, etc. So let's assume for a minute that you were to get short here on 2 lots on gold. All right. So you get short right off the daily structure signal. And let's say you had a $200 stop loss, that's 10 ticks, and you had a target of, whoops, let's click, see if we can get this target to click here. You had a target down here at this daily structure target, okay? So that is a basically 5.8 to 1, right? You had a 10 tick stop on gold on 2 lots, that's a $200 stop, and that would be a target of 1160 or 58 ticks on gold. Now you didn't quite get there, but let's assume that you brought the trail stop down here on this particular trade on gold. You brought it here to this structure signal point. Once you broke through it, you brought it down, and that's where your trail stop is. That is a 38 tick or 3.8, almost 4 to 1 risk reward on the entry off of your daily structure signal down into this retracement area here. So again, market maker levels work really well in gold. Again, you can see how they work really well in gold, and you can plan your trades out here using this risk manager as well. So let's go back another day. I haven't done this, and so let's just take a look at where the market maker levels are on the previous day. All right, so here's another idea, right? You come in through here, you kick the signal and pay the target up here to this target. Then you had the extension 1. You opened up, you shot right through. Again, this accounts for the opening of gold here at 7:20 Central Time. And if you used these to kick the signal and pay the target up here, then you would be looking for a move here on kick the signal. And again, you bring this in here and you have a 200, a 10 tick stop on gold. And again, I don't trade gold. So if you're a gold trader, you may be saying to yourself, well, that's not what I would do. And that's okay. Like I said, but your target there, kick the target, that's a 4 to 1 risk reward ratio. And you can see that that really gets you right in over the top of that daily structure signal. If you wanted to hold on for that next level above and use that as a trailing stop here, then your risk reward here is 8 to 1 on your breakout of your daily structure signal long. And that's just a couple of days on gold. You can go back and take a look at that. All right, so that's gold. Let's take a look at another futures market. Let's take a look here at the NQ. All right, so again, I haven't really looked at these today, so we're going to see together what these things look like. And these are your market maker levels again, loading it up, loading the data up here. All right, so you had a couple of ideas. Let me do this here real quick. I've got 2 of these applications on here, so let's click on that. And give me just a second here as we get this thing. Okay, so today you open up on the NQ right here at your structure mid. Market kicks this signal and pays this target, and then as it begins to fall off here, you had an opportunity, you had a couple of opportunities here on the NQ. If you wanted to, let's do it this way. Let's say you got short right here on the NQ, right, as a first time touch short. You put in, let's see here. That is, let's see if this is going to let me do this. Give me a second here. We're going to come back here and do it this way. Okay, so if you got short here, the short was there. Your stop loss here, let's see, there's 80. It's a little bit different. There's a $200 stop loss, and you have a target at your structure mid down here. So market rallies up into this zone here, sells off down almost to a target down here at the structure mid, and then rallies up, right? So again, you can see that this was a move into this daily structure signal. If you use that as a first time touch short, you almost get to here to your mid. In fact, this comes down, that's 27 ticks, and this would have been 30 ticks, right? So you missed it by 3 ticks on the potential target down underneath you. That's still a 1.5 to 1 risk reward, and maybe you get taken out at break even, maybe you take some off the chart at that point. All right, so on this breakout through the structure target here, this would be an opportunity to look to potentially get short at this structure target here. So if you did a short there, if you did take a short right there, all right, and you said, okay, that's the short. And again, if you're an NQ trader, you may have different ways to do this. I'm just kind of giving you a standard risk reward. There's $200 on the risk, and the target down here at your daily structure signal. Actually, technically, your target would be the daily structure target underneath you. And the reason for that is because once you kick the signal and pay the target, you're looking for it to reach out to the target underneath you. But again, you could do at any one of these points along the path here, right? So it comes down through here, and maybe you take yourself out here at the structure signal. Maybe that's where you take yourself out, right? Right there. That is a 1.5 to 1 risk reward. That's 30 ticks. If you come down here to that is 60 ticks, and you would have, actually, this is exactly what you would have done. You would have waited for this to filter out, and you would have been taken out back up here, right? So that's what would have happened. Now you get another chance up here at the structure target, market sells off, and you get the idea. The point is, you can see how much rotation there was around these support resistance levels until the market sold off in a heavy way underneath. So let's take a look at one more day here on the NQ. All right, we'll take a look at one more day on the NQ. Here's a really good, clean example of kick the signal, pay the target, right? You come here, you're long here at the open. Whoops, we have to do it this way, I think. So we'll close this. All right, we'll come in here, and we kick this signal here. That's the long. If you have your, right here, that's 170, that's 17 ticks. And your target above you is the structure target here. That gives you 49 ticks. That's a 51 ticks rather. That's a 3 to 1 risk reward. Structure signal to the structure target, and that's exactly where the market stops before it pulls back, and then we come down and rotate around. And you can see how each one of these levels gave you some support on the NQ. So again, you can see here clearly that these levels, again, work on the NQ, and this is just one example. We have a couple different types of levels that are associated with these market maker levels, but again, that's the NQ. Let's take a look again here at the TF, at the Russell. Take a look here at the Russell, and this is today's opportunity here on the Russell. So if you go, here it is, really again, right? Kick the signal. Let's do this. Let's put this here. So kick the signal down here and look to pay the target with. So let's close these, right? So you come down here, and this moves, I think, in the same way that the ES does. There's the entry. Here is your 200. Here's your 10 tick stop for $200, and your target would be up here at the structure target. So let's move this up here. That would be your ultimate target. That's 127 ticks. Now that's a long way, right? But that's your risk reward ratio. Market continues to rally, and this is today, right? So if you had your stop here at this level at the structure mid, you would have come down and been trail stopped out here, right, at 42 ticks or 4 to 1 risk reward. Ultimately, though, the market does continue to rally up, it looks like, and comes all the way up into your daily structure target. So again, on the TF, you can see how these levels were well respected today, and the market rallied up. And so on the trade here, on this particular trade, you had a 4-to-1 risk-reward ratio, right? And we'll take that, all of us will take that all of the time. So let's go back one additional day and just take a look here on the day before. So really, I am not cherry picking these. I'm just kind of going through them here. If this is the short here, right? If this is your kick the signal here right at the open, and this is the way it would have been, this was your signal entry. There is, well, let's just go up here. So we'll keep pushing this back just a little bit here. Let's say you've got a 10-tick stop on the Russell, and your target was the daily structure target underneath. That would have been a risk-reward ratio here of, let's see, that was a risk-reward. That's a stop loss of 10. That's a 66 tick. That's a 6.6 to 1. So basically, I think what, and again, I don't trade the Russell. I'm just kind of looking at this as the way I might trade it if I were in it. You came down to this structure signal target down here. That might have been the place where you take your profit. That would have been a 4-to-1 risk-reward, or if you waited for it to pull back. And again, I don't trade these, but if you waited for it to pull back into here, then it's a 2-to-1 risk reward. It's a $460 trade on 2 lots. But again, kick the signal, and ultimately you're looking for it to pay the target down below, and that's exactly what it does, is come down and kick the signal, pay the target down below. All right, so that's a long kind of, I just wanted to really go through really quickly with you and show you that they work not only on the ES and the CO, which you see in here all the time, but they also work on other futures markets, gold, YM, NQ, TF, like I just showed you here. Also, this tool that we provide you is a really cool risk management tool. So this comes with just the basic subscription, this risk management tool. It's really pretty slick, right? And you can kind of play with it to get your risk reward and all of those kinds of things. Because if you followed us for any length of time, you know that the way that we measure risk reward is also very important to us. So going back to where we started here today, which is this ES trade, and we'll come back to the ES. All right, so let's close these. All right, so we got long here on the ES at 24.27.5, and I bailed out when we hit this double top a little bit early. I could have carried it on up. I did not. It was a little bit sluggish, and I was a little bit concerned about it, but ultimately it ended up being the right move. So that's the trade that I'm going to let you watch here. It's very quick. I condensed it down to about 45 seconds, so the trade itself is not going to last too long. I just wanted to give you a sense of that we do play the levels that we talk about in the live trading room every single day. So without further ado, here is that OTG trade of the day. All right, there's 27.5 and in at 27.5. Target is 31.5 above you, 31.5 above. So if we get to 6-7 ticks and can't get through, then I'll get to break even. So that's right into your daily structure signal here. All right, so that was your ES trade of the day. Again, pulled ourselves out just a little bit early. Obviously, should have held on for the bigger target, the fuller target, but I didn't, and that's the way it goes sometimes. Also, I think it's important for you to notice and see that these market maker levels really work in whichever is your favorite market. So if you like the NQ, the TF, the YM, gold, and you don't think that these levels are right for you, we just went through a pretty lengthy little discussion on how these levels can effectively be used in those other markets. So again, as always, I want to say thank you for spending time watching the videos here at the Oil Trading Group. And until next time, I want to wish you good luck and good trading.